Gears and talk about consumers in Latin America. Peru's middle class has doubled in size, and so does their access to credit. And that includes the high interest rates and hidden fees that poses a challenge to first-time borrowers. Dan Collyns reports.
The combination of an economic boom and bilateral free trade agreements has transformed the shopping experience in Lima. There's just more of everything. And whether it's the latest fashions or electrical appliances, it's all catering to the swelling ranks of the middle class. That buoyant consumer spending is tempting people to spend money they don't actually have.
15 years ago, about 20% of the population had access to any kind of credit or any kind of banking product. Today, the number is around 30%.
So around 70% of the population is still outside the system, which means there are a lot of novices, a new generation hooked on easy credit and getting stung by mounting debts. It's not surprising in a growing economy to see credit card advertising everywhere. The problem is that many Peruvians are not reading the small print, so when they whack it on the plastic, they can wind up getting way out of their financial depth. Enrique Diaz's company teaches workshops on financial literacy to private sector employees. Through Proyecto Alcanzar or Project Reach, he wants to enable coming generations to make informed financial choices. He thinks Peru needs a national financial literacy policy.
The poorest, or the ones with the lower incomes, are the ones who waste much more money than the other ones, because the other ones has already some sort of education, has better tips, have better advisors.
Consumer spending is one of the biggest drivers of Peru's 6.2% average growth over the last decade. But with Peru's personal finance industry growing at this pace, will its new users be beneficiaries or victims? Dan Collyns, CCTV, Lima.